Welcome back to Earnings Central, where we will be recapping all of the earnings that came out today. Let's just start off with M&M. M&M's results came in a tad below what the street was estimating. The sales were up about 56% at 497 odd crores. The profits more than doubled. They came in at 413 crores. But this time around, really, there were many factors due to which the PAT was lower. So not just were the realizations lower this time around, realizations actually saw a degrowth. The tax numbers were higher. The tax income and the lower other income figure, along with the higher tax rate, was what really did it for the company and saw lower PAT at about 413 odd crores, while we were estimating about 500 odd crores. The company says that it sees the margins under pressure on the rising commodity prices and may not really see the margins at these levels going forward. Also, the board has okayed a 2:1 stock split. Here's what Pawan Goenka, the president of M&M's automotive business, had to say about the results.
Biggest contribution is in terms of sales figures that we have. Both tractors and automotive have brought in very good sales figures. Of course, compared to last year Q3, they are fantastically well, because last year Q3 was a very, very bad quarter for both of the industries. But even otherwise, if you compare Q3 for the last 5 or 6 years, this is the best Q3 that we have had in the last 6 years. And we have had good industry growth, and on top of that, Mahindra, both in automotive and tractor, have had slight increase in market share compared to what we had Q3 of last year. So the first primary thing is the way the volume has grown. Second, of course, is also the profitability compared to last year has grown in all regards. We have a very good profitability margin in Q3. Of course, there has been a little bit of a dampener in terms of commodity prices, which have grown about 3 to 3.5% in the last 6 months. We've been able to pass a little bit of it, but not all of it, and therefore you would see some reduction in profitability compared to Q2,
right,
but a significant improvement compared to Q3 last year.
Right. Talking about your margins, your operating margins have come in at 15% versus 18% if you compare. There has been that decline. Now, going forward, you think you'll be able to sustain at these levels, or it is likely to come down from here?
Well, I should first tell you that when you compare to Q2 last year, there was an element of OCTRA refund, which was a one-time element of about 80 or 90 crores, which contributed to the profit margin in Q2, and that figure was not in Q3 there. So that is about half of the reduction has happened because of that, which is in a way extraordinary item that we had, exceptional item that we had. But then there is a loss because of raw material prices. Now it depends on what happens in Q4 in terms of raw material prices. There is some pressure on commodities, but some other commodities are doing okay. So I won't expect a significant increase in raw material prices in Q4. The interest rates also should behave reasonably well. The only uncertainty is what happens to volume, depending on what happens with the package, stimulus package that will be announced in the budget. So that's the only uncertainty that I see in the industry. Otherwise, we should manage reasonably well.
Right. And talking about your capex and your fundraising plans, if at all, in the coming quarters, would we see that? And also, as far as your total capital expenditure plan is concerned, take us through that.
Well, total capex, talking only of the automotive business, it's somewhat complex now because of the Chakan project and many other things that are happening. But in the Chakan project, we expect to spend about 5,500 crore between 08 to 13. So on a five-year time frame, 5,500 crores, which is what we had announced when we had announced Chakan project. Besides that, there's another 2,500 crore of capex in 10, 11, 12, and 13. So overall capex for the automotive business is of the order of 8,000 crore in a span of 5 years. This includes Mahindra Vehicle Manufacturers Limited, MVML, includes the Navistar joint venture, both for engine as well as truck, and the M&M base company. So all these 4 companies together, about 8,000 crore in 5 years. In terms of overall capex plan for M&M Limited, and there's another 2,000 crore added to that to take care of tractor investments that we would have.
All right, that is Pawan Goenka talking about the capex plans of the company and what kind of progress you're seeing as far as the LCV space is concerned as well. Gujarat NRE Coke was the other one that announced its results today. The sales were down about 30%, came in at 312 crores, while the net profits came in at 27 crores versus 13 odd crores. Speaking to C1BC TV18 earlier today, the management, Arun Jagat Ramka, spoke of how coal prices have been under pressure.
Basically, right from January till September, the prices were rising very steadily. And since September till 15th December, there was more of a sideways movement. While we were expecting the prices to go up sometime in October, they actually went up by around 15-20th of December. So there was a, you can say, 2-month additional sideways movement at the same price level as of September, which is reflected in these results in two terms, both in terms of our turnover, because we are expecting a price rise. We are trying to delay most of our selling commitments and sales, and we are only selling where absolutely necessary to maintain the customer. And also, you can see that way that the margins have improved if you compare with the previous quarters, but not to the extent that I would have expected given the current price of coke.
Arun, morning. So where is it that prices are reigning at right now?
Now we are almost touching 18,000 rupees compared to a level of 15,000-16,000 rupees in September, October. And I am expecting further price rise in this quarter, maybe in February or certainly in March, given the global scenario of coking coal and both met coke.
Are negotiations on to change the long-term contract prices in any significant manner for coking coal, Arun?
Yes, this year the mining majors like BHP have tabled a new proposal to the Japanese steel mills which they are negotiating. Initially they were asking for quarterly pricing for their entire tonnage. Last week they have tabled 3 new options, which basically means 50% of the tonnage on annual and rest 50% on quarterly pricing. So that would also be a significant move as far as Japanese negotiations are concerned, and would see more volatility and maybe larger uptrend in the coking coal prices as we move forward during the year.
Does demand remain quite stable though, Arun? I mean, for the rest of this calendar year, what kind of production targets have you set out, keeping in mind the demand picture?
You see, the demand is mainly from the steel industry, which in India has been going strong, while world over, South America, after remaining almost quiet for the last 12 months, is now looking up, even though the signals from Europe are not that positive even now. And I would expect coke demand to remain almost in India. Like last year, we expected to import about 2.5 million tons against our usual import of 5 or 6 million tons. But current year, I would expect India to import more than 5 million tons. And that would basically mean that coke prices would remain high because the global supply has shrunk in last 12 months.
So what is it that you think you can hold in terms of margins then for the rest of the year, Arun?
I would expect our margins to improve substantially in the coming quarter, and then maybe adjusted a bit based on the new coking coal prices which will come into force from April on the new contract.
Alright, that was the Gujarat NRE Coke management with a snapshot of their earnings this time around. On that note, we'll wrap up with this edition of Earnings Central. Keep watching for more news.